Hey, good morning, Dale.
Hi, Arnaud. Great to have you back.
Thank you so much. I'm glad it's working, and let's see what we can cover today, huh?
Yeah, so I see a stop sign up there. What should we do? Stop trading, stop averaging out, stop putting our stops too tight. What's the implication of the stop sign here?
The stop sign here, it's actually, it was an update on gold. I posted here for free to the public to stop listening to the talking heads on mainstream media that continuously seem to call the the top and the bottom, but more as contrarian indicators, and instead start listening to the charts a little bit more and look at what the charts are telling us. That's why. So I was
Yeah,
actually just
I was just talking to somebody that I mentor in the diversity of opinions in gold. There's always diversity, but I mean, you have, conviction from some pretty good people on both sides of the market. And to me, it's like, you know, neutral here. Are we going to break out over 1360? Or if we take out the recent low, are we going to 1250? I know you wanted to concentrate on SPX, but do you have a view here on gold? I know you have an expert on your team in gold, but since you started there, do you want to show it and tell us what
um,
your structure is, or do you want
hmm.
to go right to S&P?
No, we can go over it. I can quickly. So our expert is Michael Boysen. He joined
Okay,
me earlier this year, and he's covering gold, silver, platinum, and as well as some
mining
forex,
shares.
like US, yeah,
Oh, okay.
US dollar, Canadian dollar, yen, that kind of stuff.
I did
So
send
let's
him,
see here.
Arnaud, I did send him a DM to try and arrange an interview for him, so maybe we could give that another try. But okay, so here we're looking at,
Hmm.
is that the gold monthly? Okay,
Yes,
so,
yes, correct. So he has gold setting up in what I believe is currently a wave two decline, where we should have, I think, right now a counter trend rally, followed by a lower low, and after that we should be able to rally well over 1400 to complete a fifth wave, as Michael has it. So we have first wave up of the fifth, the second wave down,
no,
possibly here because it's almost like an equal low, and this looks a little bit like an odd, I would say, smaller first wave. Could be diagonal, but not necessarily. And now we should be working on, the third wave already, which is setting up again as a fractal as a first and a second wave. So once this current ongoing correction should complete, then it should be really off to the races.
okay,
That's
what's that
that's pretty.
moving average, the red line that you have there on the monthly? What are you using there? The smooth
Which red?
line. It looks like a red line, looks like a moving average. It's just
Oh, that one.
underneath where the gold is now.
Yeah, I don't
There.
know which moving average that is. I'm sorry.
Okay,
I
that's
I,
okay.
I won't be able to tell.
All right. I was wondering
I
if that
can
was
look it
right
up for you.
around the 150, 1250 level for where this pullback might end, but that's okay. So basically,
Right around there. Right around
yeah,
there.
is it? Okay, so basically, look to buy this break in gold if we trade under the recent low of 1280, you'd be a buyer.
Right.
Okay,
Right. Yes. Yep. Yep. Yep.
okay. So that's gold. I know you wanted to concentrate on the stock market, and I remember you did call that break. Nice call on that, Arno, that we had in
Thank you. Yeah.
December, the worst December since 31, I believe, or 34. And then you sent me a message and said, okay, that's probably it. For
Yep.
now, we'll see where we're at in the spring, and I believe we're
Yes.
only a week away from spring.
Yes.
The spring equinox, right? So the timing was great to have you back just before spring. Here we are.
Yeah. So let's go over what we have. Um, so yeah, that was. fall last year, and the reason why we're getting bearish was that it seemed like there was a nice complete picture into that high, with just a few more scribbles higher, so to say, and that the monthly charts were setting up negatively with negative divergence across the board. The weekly charts, because the rally here is the NASDAQ shown off the April lows, was just very stop and go, right? Lots of stop and goes. So then we got into the end of December, and since then it's been pretty much straight up with very few down days. I think last week was pretty much one of the first weeks actually all major U.S. indices were down. That hasn't happened since December. I think.
Yeah, really, I thought that was going to be it. I mean, I'm not an Elliott Wave practitioner, but it was such an ugly weekly candle. I was pretty surprised. There was a Bradley date. I don't know if you follow that stuff, but I poo-pooed it. I said, well, normally I'd pay a lot of attention to a Bradley date, but I'll go with the weekly candle. I should have gone with the Bradley date. The NASDAQ so far is the only one that has negated the recent highs that we had last week. You still think that this is still a failing rally? We're not going to take out the highs that we put in. When was that? Well, aren't we above those highs in the NASDAQ 100? We are, but not in the NASDAQ.
Yes. No, NASDAQ hasn't reached over it yet. Probably it will if the NASDAQ 100 did it. Not necessarily, of course, but
Yeah, 7210 was a high in the NASDAQ last week, and we're trading above it now.
Yes. Oh, okay. Yeah, and then we might as well go above it. The problem here is from an Elliott Wave point of view, there's such little downside during this whole advance. It's a little arbitrary how to exactly count all these smaller waves, because there's just it's pretty much been straight up with at the most 3 down days in a row, maybe 2 for some indices, and that's it. So that makes it pretty hard to count the advance from an Elliott Wave perspective in any way you want to slice or dice it, because then you can make, is this a 1, or is this the 1, is this a or is this the B? It just gets very
convoluted.
Yeah, convoluted. So if we go back here, once this correction in November, this is the NASDAQ again. NASDAQ was going on. I think by the time it broke early December, I said no, we should bottom around 6,300, 6,400, and we came pretty close. The NASDAQ bottomed at 6,200, so just a little overshoot. So my price target there was pretty good. I expected that to be a 3rd wave, and then we would get a 4th wave up, and then one more relapse lower to set up some nice positive divergences on many time frames. The daily MACD, the relative strength indicator, market breadth.
A lot of guys were looking for that retest, and so they watched it all the way up. And does it have any kind of meaning? The fact that what normally would have happened, a retest, is that inherent a market tell about just how strong or maybe manipulated the market is, that you normally would have had some kind of retest to see if that low was real?
Yeah, I wouldn't say manipulated. We do know that some people met over Christmas dinner to hammer out some things. So if you want to use that as a conspiracy theory, great, go ahead. It's there's no rules in the market that say it has to do this. It most often does happen at very important bottoms, that you just get a retest of the bottom, either just a little undershoot, or it just stays a couple of points above it, and then we get the takeoff. Because the bears are just unable to push price lower. We get all these divergences, and that's when the market takes off. That just didn't happen. I think that took many by surprise. So
does your count change? Does your count change now that we're taking out last week's highs? It's not a failing rally.
Not really. So, using Elliott wave, I still think we could count the whole advance pretty nicely as 5 waves up. We have the first wave here, the red one, then we get wave 2 down, which was, quite a steep drop here in early January. We get a third wave up, and this one is around 1.382 extension. We get a drop to about 100% extension. So that fits Fibonacci pretty well. And then we have a clear 1, 2, 3, 4, 5 waves up off the mid-January low.
So could this new high, like last week, okay, so the decline from 5 that you're showing right here was last week's action, right? And you were calling it A. So if we take, which we have in the NASDAQ 100, took out last week's high, could that keep your count being a regular B at new highs?
Sure. Absolutely correct, Dale. And I mentioned it to my members over the weekend and before that, you just don't know beforehand what this B wave is going to do. You assume it's going to retrace up to 62%. That's just an assumption you have to make. But it can overshoot and become irregular, and it makes new highs. It can go, in this case, I think on the NASDAQ, up to 7,800 without a problem, and then drop lower. I think that's something we saw in 2011 as well, just before the bigger crash happened. Now, I'm not going to say that's going to happen now, but there was, in my humble opinion, an irregular B wave before the larger C wave took hold. One of the reasons why I'm skeptical so far of this rally is when we go to market breadth. Let's go to that one for the NDX. And this can change, but so far, it's just been an oversold rally. The market breadth yesterday was still negative. So we've seen 2 days of rally on negative breadth. Now that can change, of course, right? Today and tomorrow, it can become positive, and that helps the bulls. But so far, the rally to new highs has been on more declining than advancing stocks. Every single McClellan oscillator that I'm showing here for every index, this is for the Dow Jones, is negative. So here's -8. If we go to that for the NASDAQ itself, it's also -26 yesterday. So it's still so far been a rally on negative breadth that I always find suspect, especially when we get this late into a rally here. Same for the S&P and the NYSE. It's all negative breadth.
So all your internals are saying, despite price, the internals that you watch are not confirming the move.
No, correct. And it can change, right? Because price, of course, is the final arbiter. That's what we have to follow. But, like yesterday, the Dow Jones was down thanks to Boeing, because Boeing is, of course, the largest weighted price in the Dow. And if you want to talk about manipulation, you just buy Boeing or sell Boeing and you move the Dow. That's it. There's nothing else to really move that index as much as possible with one single stock. It's quite easy if you so desire and want to talk about conspiracy theories. But let's not do that.
A lot of people say the Fed shorts vol products to try and put a cap on. You've heard that one too, right?
We've heard it all.
You've heard them all?
Who knows? Who knows?
Right.
In the end, it doesn't make me any money knowing that. I want to be on the right side of the trade. Anyway, so that's what we have, right? So as you can see here, for like almost 2 months, we had declining breadth, but price did keep on going higher and higher and higher. It takes a long time for the market to finally catch on that declining breadth where less and less stocks are participating. So, last week wasn't really a surprise. I personally had a turn date for March 5th. Sorry, was it March 5th? Yeah, so that was on Tuesday last week, and the market turned on Monday. Now I have a turn date actually for today. So we'll see what happens if we can get a pop and a drop. Again, breadth is not really supporting this move yet. Another piece of evidence for the current up move is if I look at the 10-minute tick chart, right? The tick is the change in stocks going up and down. If we look at December, right, here's the December low in 2018,
Yeah.
gobs of breath. The tick is here well over 800, running in the thousands, for days on end, pretty much. This is on the 10-minute scale. After that, of course, it starts to taper off. We have a few more ticks here and there, but most of the time, as you can see, it stays above zero. So the breath has been positive, and that's why market has been rallying. But this is really a kickoff wave here, right? This is really kicking off things. Now we're going to go to the last 2-3 days. Nothing. I see nothing, right? It barely moves over 500. That doesn't mean it can't go up short term, because breath is still positive and, relatively strong, but nothing compared to what we saw here in December. So that's another, I think, point that shows, maybe if my count is wrong and this is a fifth wave, it fits the fifth wave scenario, or it is a B wave that could become irregular. There just doesn't seem to be enough strength in it yet. Again, maybe today that will change and we'll see the thousands on the chart. This is in a 10-minute resolution, so the 1 minute does have a few higher peaks, but the 10-minute just doesn't catch that. That could happen, but right now I just don't believe it yet. But we'll see what happens. Again, price is up and futures are up, and that's what it is. So,
Okay.
if we then go...
well, you're on F.A.C.E today, and I saw a little 3 drive in the S&Ps and NASDAQ, so you probably get your reversal today, because, everyone all over the world's going to hear this interview, and they're going to front run it. So... and it'll be forever on tape that you were here for the end of this this rally. But your bigger picture though is whether or not you participate if this break happens, you have a very bullish wave count that if we do get this pullback, say it corrects half of the advance from the end of last year, you're looking for sharply higher prices. That's the bigger message, that all we're looking for right now is a correction of the advance, not new lows or anything like that.
No. And one of the reasons, so this is my preferred count. There's always 1 or 2 alternatives. So the preferred count is that we had a large fourth wave bottom in December, with a irregular fourth wave starting in January. I can show, for example, if we go to the NYSE and the Dow Jones, the NYSE, I'd actually go to my website. I think I have a better overview there, where I say, why do I think we have a large fourth wave? Here's the NYSE. It's, over a monthly time frame, we have a nice Elliott wave channel here. We have a clear ABC on the NYSE from January last year into December, right? A, B. This whole advanced deal here. I'm going to zoom in from February to September, October. That's nothing. This is corrective flop. That's a B wave. I cannot count it any other.
Yeah, a bunch of overlaps, nothing impulsive, just kind of marked it a lot in time rather than price to work that sale off. Okay.
So I know the S&P made a new high, the Dow Jones made a marginal new high, the NASDAQ and the Russell did as well. But they could actually, for example, the Russell was a clear 5 waves up, but they just simply are in a different count. It doesn't mean that one index is doing this, the other index is doing exactly the same. If that's the case, then there's no even a point to having the 2 different indices, because they're both exactly behaving the same. So here we clearly have something else. And the interesting thing here is in December, we had exactly the C is 1.618 times extension, correct?
Yeah.
So this is perfect, Fibonacci beauty. It just hit it perfectly. So this is A, and this is 1.6 times A. This is a perfect ABC correction, very large fourth wave, in my humble opinion. We go back here to January for the NYA, and we see we have 5 waves up, 1, 2, then subdividing third wave, 1, 2, 3. Again, the internals here, we get a perfect 1.674 extension for this green fifth wave, which is a classic fifth wave target. In the standard impulse, we have the 1.382 extension for the third wave, the green one here, hit. Now, the fourth wave normally drops lower in those cases. Doesn't have to, so it's kind of bottomed here at the 100% extension. So this is a nice classic 5-wave pattern for this third wave. Now, this fourth wave here, so the third wave for the larger third wave in this advance of January hit the 1.236 extension, pretty much to the dot, boing. Normally, I would then think the fourth wave would go lower. Again, the market was simply very bullish for whatever reasons, and instead thought, you know what, we're going to extend the crap out of this, and we did an extended fifth wave up to the 2.236 extension. Again, hit exactly to the T. So nothing weird really going on, looking in hindsight, of course, but this looks like a perfect finished impulse of the February low. Perfect. Then we have a perfect correction. I mean, A, B, C. I mean, I don't see anything else but a correction going on. So this tells me that this is most likely a finished fourth wave, and that we're therefore starting our fifth wave. Now, the gobs of breath we have seen over the last couple of months. I think the weekly McClellan oscillator for the NASDAQ set a new high. Hasn't been seen since I think I have data. So that shows there was these gobs and gobs of breath going on, which is often the case in a kickoff wave. I think there was a Zweig breath thrust. I don't know if you've heard of it. No. It's from the late Marty Zweig, who said when the 10-day moving average of a breath indicator goes from minus 40% to plus 62% within 10 days. It's such a strong underlying market breadth that it is often a kickoff wave, and then the statistics show that on average the market will gain I think around 25% over the next 10 to 12 months. So there's a lot of lines of underlying evidence that's would tell us that, well, hey, you know what, this probably will go higher even after correction, and after every fifth wave there's always a correction. So can it be that the whole correction is already over at last Friday's low? Yeah, it could be, but boy, that's really quick. I think a 2-3 months advance would take a little longer time to digest by the market before it can kick in gear to really.
Do you do anything with time corrections or
yes, I do.
Work?
Yeah. So I have my own cycle work as well. Let's see where I can find some of that. So those are actually just Fibonacci based time series.
Okay.
So here I had one for March. Misspelled it, sorry. March 5th. So we got a turn on March 4th. The next one I have in a shorter term is March 25th. And then I have another one on March 23. The prior one was February 3, which was just before this little blip. I didn't really catch this bottom here. I did here, for example, I had the November turn. I was close to the October turn. I had the October 3 top here. So there's plenty of evidence that the market is following this shorter term cycle. It's about a month long, I would say. It's a little bit based on the lunar calendar, but most of the time it's simply just price. And then
so I'm just making a guess here. If we do start topping in here, today, are you looking for the cycles that you had? Oh, you have a date here as well on the 13th to stretch time-wise into April for the end of 2 before 3, something like that?
Yes, absolutely correct, Dale. That would be my preferred scenario. I've had it for 2 weeks now, and saying we would start topping around March 4th. That happened. We would decline into end of last week. I would have liked to see the decline really end on Monday, but I think everything got shifted by 1 day. Since my turn date was on March 5th, we had it on March 4th. So then, the next turn date would then have been, preferably on Monday. That didn't happen. So everything I think has got shifted a little bit. So
another waiver. I do a lot of intelligence. He was bothered by it was only last week's action was only a 3-wave move. And that's why he thought we could, in S&Ps, take out 2820 before the correction. begins.
Okay, yeah,
Are you in
that's
that
very
camp?
possible. Yeah, I wouldn't be surprised to see this being a regular wave. So, the trapdoor is shot, the shorts are going to be squeezed that have probably been put just, at the 28.15 or 20, whatever it is.
Right.
And then, the trapdoor is set and then will fall again.
Okay.
Into end of the month, because I have a turn date again on March 25th, I believe it was.
Okay.
Which I believe fits with some other turn dates as well.
I had a nice lead going into this week, and then this week I've been squeezed. My head has been squeezed so hard, my eyeballs were popping out. Like in a vice, So,
yeah.
all right. So, do you have anything, there's a lot of debate about the dollar. Arno, I know we didn't plan on talking about it, but it's pretty, is 97 the high? Are we going to break out through 97? Do we have to pull back to 94, Dixie? Has the euro bottomed at recent lows?
Oh, boy.
Yeah, that kind of stuff. So what are you thinking?
Let's see. Where do I have my dollar? I think the dollar.
It could go dollar or euro. That's U.S.
Yeah, it can still go
there
a little
it is.
higher. Yeah, this is the U.S. dollar gold relationship.
Okay.
Long term. Let's see. Well, I think the dollar can still go a little higher because as we talked about with gold, we think it will go a little lower first before it takes off. That often means that the dollar will go a little higher before it drops. The dollar and gold are longer term, most of the time inversely related.
Not lately,
right?
though. Not lately, though. How do you explain that gold had this nice rally from 1160 to 1345, while the dollar was pretty much going up too?
Yeah, it happens. If you see here, there's no real relationship, for example, between 1990 and 1996, so 6 years of no relationship.
Okay.
A little bit here. So it happens, right? So these things are disconnected. For whatever reason it happens. I'm sure you can find some small blips that match up, but I think the longer term, bigger term picture is always, here we go. Dollar goes down, gold goes up, the dollar goes down, gold goes up, dollar goes down, gold goes up, and vice versa. But there are times where it's just not working. And I agree, somehow here we have a drop in gold. Yeah, the US dollar goes up, but gold goes up and dollar goes up. Yeah, so there's something, I don't know what the market is looking at, why both likes gold and dollar at the same time. I don't know what the underlying mechanism is. I don't know what the play of the Federal Reserve in this is, because of course they are have the finger on the button for both. So I don't know what their role in this whole play is, but most of the time, if the gold goes down, US dollar tends to go up. But maybe we are in a time now where everything goes up. I don't know.
Well, how about gold goes up against all fiat? Because before this recent rally, it was going up in almost every other currency term except the dollar. And now that it's going up against the dollar, that's kind of like, I guess you would call it great breath when it could perform against all fiats.
Yes. Yeah. No. Absolutely. And I think
gold
is outperformed. But I think it's a good guess. And gold has outperformed, I think, the stock market quite well. I think over the last decade or so, on nominal, percent terms, it has really strong. If you look, if you just simply look here from the year 2000 to where we are now, it's a fantastic. It's been a fantastic rally and increase. So it's gold is here to stay. I mean, this is a longer term, a strong looking chart. I see nothing yet that tells me this whole move is over. I mean, look at this advance; it's fantastic, and it seems like we're just kind of digesting this 10-year advance into the 2011 high, and these things take time. So we'll see what happens.
Okay, so if you covered all the markets and charts that you wanted to show us, have you?
Yeah, pretty much.
Okay.
So,
all right. Well, then, Go ahead.
If you have 1 more minute, just
Yeah,
real
we do.
quick. So,
All the time you want.
Going back to the NASDAQ. So again, my preferred view is that we bottomed larger picture-wise for a fourth wave, and we're going to rally into a final fifth wave, maybe into 2020-21 before the new president is elected, and we'll see how the market will like the new president that's being elected. But that's just a hunch. That's again based on the premise of the market breadth and the Dow Jones and the New York Stock Exchange I showed. The other alternative is that we're actually still in a larger fourth wave. We're just simply going to kind of correct our way a little lower in some odd ways. And then again a rally. So again we get a drop, we get a rally, and here the bulls might think, oh well, we have a third wave, but the market goes, no, it's just a C wave of a larger B wave, and then the rug is being pulled from under, and we still go below the December low before we rally. So that's also possible. So that because it can be a 535 correction, correct? So just a larger 535. You never know if a 5 waves up in the beginning is an A wave or a first wave. Most likely the first wave, because the markets do trend higher longer term. So it's kind of a little odd to count it as an A wave, but it's absolutely possible. And we'll get a larger correction, something like here I've shown, and then a B wave that might take out the all-time highs or not, and then we drop. And after that is when we get a multi-year rally. And the last one, which is definitely not my preferred one, is possible. We already topped and we're working our way down to lower. It's possible, but I think breadth has been so strong, it's not arguing in favor. So these are my 3 options that I have and that I'm following. So we have 3. One is just instantly bearish. 2 are little intermediate term for the next 2 weeks, bearish, then bullish. So I think the odds favor a bullish outcome once this correction has passed. And that's what I'm looking at, bigger picture wise, and we'll just see how it plays out. But I prefer a little lower, buy there, and then see how far we rally, and move your stops off accordingly, and don't necessarily think it's going to be a third wave, but think about making money and move up your stops, because that's what we want to do. Just make your money. If the wave count is wrong and you still make money, that's better than your wave count being correct and losing money, right?
Exactly. So, what's your your doctorate in, your PhD in, Arno?
Oh, good question. I have a PhD in environmental sciences.
Okay.
So that has always been a lot of looking at temporal trends in data, right? Long-term trends like climate, what's going on with pollution in the environment. How is it trending? Seasonal adjustments because of rain, of temperature, of physical processes. So I've always looked a lot at patterns and trying to deconstruct patterns to understand, because most of the time, there's seasonality in patterns that you need to deconstruct if you want to do a linear analysis, for example. And that has helped me a lot in analyzing the markets, because the markets are quite seasonal as well, right? They follow cycles.
Right.
And they have patterns, and Elliott wave is a pattern. And I just found it very interesting to see that some of these patterns that we see in nature apply to the financial markets, seasonality, and that's just fantastic. And
are you in the global warming or upcoming new ice age camp? There's both.
Oh,
maybe you didn't hear about the upcoming ice age.
No, I'm not prepared. I'm not prepared.
All right. Anyway, I interviewed a guy who wrote a book about it. A lot of it has to do completely with the sun. Yeah. Yeah, no, I saw that interview. I think it was really good. I mean, there's been no doubt, of course, been global warming. The question is, how much have humans attributed to it? And the science is not as clear-cut as some other people want to make us believe it is. There's still a lot of uncertainty. And we still have a lot of time on our side to actually find out the science and make appropriate adjustments to our policies and economy if necessary. A quick 10-year fix to completely supposedly remodel our economy is, of course, going to be disastrous and impossible to do. And it's not necessary. The current rate of warming is not as alarming as some might make it believe. And there's still plenty of time for us humans, if we are the culprit,
to do something about it. And I'm always for trying to clean up our mess. And I think we've done that greatly. I mean, if you look at the United States, how much cleaner the air and the water have gotten, for example, how much more energy efficient we've gotten, how much more miles we travel, in our cars with less gasoline and soon maybe all electric. It's fantastic. So I think the human progress should be always put forth first and above everything else before we start taking drastic measures to save the planet from something that science is not fully certain about yet. So that's my view. But
okay, well, it was really a pleasure talking to you, and thank you so much for sharing your 3 counts and equities in NASDAQ. And everyone, Arnaud's Twitter handle is at Intel, INTELL _invest. What is your website address for people that are listening live now and for the video later, Arnaud?
All right. The website is investingintelligent.com. Let me pull it up here. And,
okay.
So there's lots of good stuff on it. This is where you can sign up for my membership, which is now either for the major indices or the metals and the golds. You can sign up for my private Twitter account. This is private, where I just post my trades I make during the day, and you can sign up for it for a small fee. And then as soon as I trade, I tweet it. And if you have alert on your cell phone, you instantly get that alert. You can see when I buy and what I buy, what price, and when I sell. I mean, the delay is maybe a minute or two. And here I just post a lot of free stuff that I want to share with folks, where I think things are going. About Tesla, the S&P, gold, a little bit of everything, and just to kind of keep people aware. And then if I may do a little quick plug here, this is a website for my hedge funds that I started 2 years ago. It's called northcoastpartners.com. So if people want to join our hedge fund, which is currently doing really well, that'd be something that they could contact
Compliance wise, do people have to be have a certain amount of net worth to participate in a hedge fund?
Yes, correct.
They have to be accredited investor?
Yes, correct. Yes. So you must be an accredited investor according to the U.S. Securities Act, yada, yada, yada.
Okay.
But for people that want to follow the market but don't actively want to trade, or just want to have a nice steady return, as I showed, we're doing almost north of 60% since the beginning of 2017, whereas the markets are not as hot. Longer term.
Nice green line, buddy.
Yes. Oh yeah, we paid our dues to make that work. Yeah. So that's the 2 things, and let's see what we get today. I'm very curious to see if we do get a turn in the market or not. That'd be fantastic. If not, then I'm gonna have to do more work.
Back to the drawing board. So
I know, back to the drawing board.
Arnaud, thank you so much for coming out and hanging out with us today, and I appreciate your views, and recommend that people at the minimum follow you on Twitter and go check you out. And congratulations on your hedge fund performance. May continue that green line become parabolic to the upside, like Bitcoin was going to 18,000.
Yeah.
So
no, we'll just go steady Eddie. That's our goal, steady Eddie. Yeah.
Well, that's great returns in that amount of time. Congratulations, and thank you again for edifying our community, Arnaud.
Thank you so much for having me again, Dale. Yeah, the 30 minutes is way too short.
Yeah, well, we went 40, so it's still too short, right? So anyway, thank you, my trading warrior brother. Good hunting, and let's keep in touch and get back together in the summer. How about that?
Good.
All right, Arnaud.
Fantastic. Look forward to it.
All right, Arnaud. So that's a wrap, everyone. Remember, don't just, his Twitter again, Michael, is at Intel, INTELL _invest. And remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Enjoy the rest of your day. Adios. Good hunting. Thank you again, Arnaud.
Thank you.